Great, fantastic. Thank you very much, everybody. European Lithium is based in Australia, Australian management, but we have assets all around the world. We have assets that direct investment, and we have assets that are held in other companies in other jurisdictions. So the main assets that we've got is the Critical Metals Corp. We own 70% of that company. I'm also chairman of that company, and that company has two major assets which represent the bulk of the investment for European Lithium. The first asset is the Wolfsberg Lithium project in Austria. It is the only lithium project in Europe that has been permitted with a mining license and also with an environmental approval. The environmental approval is the biggest problem that Europe faces in critical metals. So yeah, if you can go down to page 4. Okay, so there's the location. So we got the two major projects there. The first one I'm going to talk about is Austria. It's fully permitted. We have mining approval. We're going to start a construction phase later this year. The lithium price obviously has taken a battering. We've done quite well though. Most of the companies have fallen between 70 and 90% over the last 12 months when lithium prices were at the high of about 7,000 a tonne. It's now about 1,000 a tonne. But all reports, when you look at the Roskill, when you look at Benchmark, when you look at Fast Markets, all believe by 2028, the lithium prices will increase quite substantially. The biggest driver of that obviously is China. China takes 80% of the world's lithium from mainly Australia and Chile, countries like that, and Africa's starting to be a part of that. So the supply chain for Europe and for the US and other developing countries is difficult. So the EU, through the Critical Metals Act, is really trying to help the 5 or 6 lithium projects that are available in Europe. Most of them are stuck with local problems in getting their environmental approvals through. We've been lucky. The Wolfsberg mine was opened up in 1983 by the Austrian government, and the mine is fully built. If we found that deposit today, there would be no way that it would be able to be commissioned, because you wouldn't be able to it's an underground, so you wouldn't be able to put any of the resource in there. So if we go to, you can actually just see the mine itself. So if you can go to just page 13, I just want to show you the mine itself. Underground, page 13. Yeah, it's an underground mine. It will produce 800,000 tonnes of material, which will produce 65,000 tonnes of concentrate. Okay, that concentrate, because of the energy prices in Europe, a lot of the costs in production, you find that in Germany, especially with BMW, Mercedes, and that the cost of energy. So what we decided to do, we're going to produce the spodumene, which then converts into a hydroxide, and then that hydroxide then converts into a battery. Once it's in the battery, it converts into your EV. The project is underpinned by BMW. We're the only group that BMW straight from mine to be able to produce. But the spodumene, the hydroxide process is a chemical process, not highly toxic, but a little bit more toxic. So getting an approval to build one of those in Europe, in the heart of Europe, especially in Austria, would have been difficult. So what we're doing to save money and increase profits is build the hydroxide plant in Saudi Arabia. Give you some metrics, 30 cents a kilowatt hour for power in Austria. In Saudi, it's 5 cents a kilowatt hour. So we've already saved 6 times of our energy costs by building the hydroxide plant there. We're 7 kilometres away from the new rail line that's going from Italy right through the Alps right up to Berlin. So that's a freight train as well as passenger train. So we'll put it straight onto the train, 1.5 hours to Trieste. The Saudis will pick it up, and what we will own 50% of that project, and the Saudis 50%. Not only do we get the savings on energy, but the tax rate is 15% cheaper, and the borrowing rates in Saudi are a lot cheaper as well. So right now we've finished the bankable feasibility study. We're at the project finance stage. Because we split the plants from one in Wolfsburg and one in Saudi, we're just updating 2 DFSs right now, and they'll be complete by the end of March. We go for project finance, and then we will start building in probably late 4th quarter this year or early 1st quarter next year. So that's a very, very good advanced project. The second project is in Greenland. It's rare earths, a massive, massive rare earths deposit. 97% of the world's rare earths comes from China. And at the moment, China has banned the sale of those rare earths to the US and to the EU. So if you look at what's been happening in the world, rare earths are primarily used for the defense industry, the rocket space industry. Elon Musk would not be able to produce a rocket or send a rocket into space. More missiles have gone off in the last 3 years than in the last 60 years, mainly through the Ukraine war and the Israeli war. All those missiles have special guidance systems in them, which come from rare earth. So it's strategically very, very important. And as you can see by Mr. Trump or President Trump's actions, he wants to buy Greenland. So the reason he wants to buy Greenland is twofold. One, for the rare earths. Two, obviously for the strategic importance of its location, for the Northwest Passage. Just in case the Panama Canal closes, there is a passageway that you can get through, and it's a lot cheaper to send goods from the US right through into in Europe. So there are 2 reasons. They've already got a military base in Greenland at the moment. It's the biggest, this particular deposit is the biggest rare earth deposit in the world outside of China and Russia. And it is in a location that is fantastic. It's in southern Greenland. If you look at that map earlier, the temperatures aren't, it's not full of ice. Most people think of Greenland, it's just got that massive ice glacier on the top. No, not so. The glaciers from this part of Greenland, hundreds of thousands of years ago, they've disappeared. But when the ice retreated, it gouged out these beautiful, magnificent gorges. So 2 meters from the edge of our deposit into the fjord, it's 80-meter drop, right? That's because the ice just gouged it out. So we don't need to build a port. We're going to be able to just use a floating dock, if you like, and the Panamax ships, a 60,000 tonner, can come straight in off the North Atlantic, turn around. We're at the end of the fjord, so there's no passing traffic, fill up, and then send out. So rare earths come in 2 categories. We're very lucky in our category. It's the heavies. The heavies are the most expensive. The lights, which there is a US producer at the moment, and ironically, that US producer, MP Materials, it's got a market cap of $5 billion. They export that and send it to China for processing, and then it comes back into the US and the EU. So we will be able to supply Europe for at least 1,000 years with this deposit. It is massive. The State Department of the US has been up there several times. We've been in discussions with the State Department, with the Department of Defense mainly. The Department of Defense have introduced us to companies like Lockheed Martin, Boeing, Raytheon, who supply the defense industry, if you like, for NATO and for the US. So the US government has, just like the EU, has a Critical Metals Act, and they are encouraging companies like ours to go out and find these rare earth materials, and there are subsidies available. So we've asked for a subsidy. It's a 1.5 billion US dollar fund. We've asked for 150 million of that. The mine itself will cost around $150 million to develop. We will be producing 3 rocks. 2 of the rocks are building material type rocks, and they will be exported into Europe. So just on those 2 materials, forgetting the rare earths, you probably are making a profit on the mine by just selling those byproducts, if you like. The rare earths then will be excavated, separated, and then sent to either the US or the EU, depending on which jurisdiction helps with the subsidies to fund the mine. In Europe, in the conversations we've had, they'd like to build the plant in Iceland, the processing plant. It's a day trip from Greenland. It's just straight onto the boat, straight across the North Atlantic to Iceland. Iceland, as everyone knows, has got the geothermal power, so energy is very, very cheap. So that's one avenue. The other avenue is obviously, if we get the funding from the United States, we'll build the processing plant in the United States. So 2 huge projects that are in critical metals, of which European Lithium owns 70%. If you go back to slide 4, please. Yeah, if you look at that, 70%. Now, the value on the close of the market yesterday, you can see, is Australian there, and our market cap of EUR. So just our 70% interest in the listed company shows that it's close to $400 million in value as of close of market yesterday, right? 400 million. The market cap of European Lithium is only about around 75 million. So there is a huge arbitrage opportunity. That's happened because the European Lithium shares are locked up. We can't sell them at this stage, but that lockup will eventually end. And once the lockup ends and we start to trickle down, we don't want to sell a lot of the investment. The investment's only going to go higher and higher, mainly because as we develop the mine, as we find out more of the different types of minerals that are there, we will be able to increase the value of critical metals. Therefore, the value, the huge value chain is in the shares of EUR. So at some point in the next 6 months, they will equate. If they do equate, the share price of EUR will go up 5 to 10 times. No doubt about that, just on this one investment in critical metals, which has those 2 massive projects. The other huge project, if you go through and look at slide number, is the Ukraine asset. We bought that asset in 2003. It's on page number 9. Yeah. We bought that in 3 months before the war started. It's a fantastic deposit. It's 90 million tons of lithium, going 1.36%. To give you an idea of value, Pilbara Minerals is one of the largest producers of lithium in Australia. They just bought a Brazilian, a listed company as well, called Latin Resources, a Brazilian lithium project for 60 million tons at 1.25%. So we're 30% bigger than that deposit. That transaction changed hands at 550 million Australian dollars. So if you put it into perspective, the asset in Ukraine, and if you look at the map, it's on the western border, not on the eastern front. where the war's been taking place. So even if there is a peace deal, even if the Ukraine does have to cede some ground, our deposit will be quite free and easy to work. It's near a nuclear power station, so that's very good news for us for low energy costs. But just doing the numbers, 90 million tonnes at 1.36% compared to 60 million tonnes at 1.25. So using those numbers, it should be worth between 700 and 800 million Australian dollars. Now, that transaction only happened last month. So even with the lithium price drop, the bigger companies, Rio Tinto, one of the biggest miners in the world, just bought another lithium project for $5 or $6 billion. So there is going to be a huge uptick in the lithium price, as I mentioned earlier. The three houses that look at the long-term prices of all metals all believe that the lithium price will rise. So our Ukraine asset is extremely important to us. Again, President Trump looks like there will be a breakthrough at some point in the next few months. We will go straight in and start developing that mine again. When we first bought this asset, to give you an idea of the value, everyone in the world knows about this asset in the lithium space. Our share price went from 4 cents to 20 cents just on the acquisition. 3 months later, when the war started and we had to pull out, the share price collapsed. So it is a very, very important asset for European Lithium. It's owned 100% by European Lithium. The other asset, if you go to page number, let's see, page 7, is the Leinster Lithium project. The Leinster Lithium project is very, very prospective. It's the highest graded lithium that's been found so far in Europe. It's going about 4% lithium. We bought this asset only a few months ago. We've got a team of people already working there. The interesting thing is the largest lithium player in the world is a company called Ganfeng. They've been in Ireland for about 5 years. They tried to buy this deposit, but we beat them to it. They surround us. All of their tenements surround our tenement. So it's a fantastic opportunity for us to maybe do a deal with Ganfeng, go out and drill it ourselves. So no resources have yet been calculated. It's just mainly, this is the most grassroots of all of the projects, but it's very, very highly prospective, and the grades here are just phenomenal. I've just told you a few of the numbers. The Wolfsburg asset, for example, is 1% lithium, and that's going to get the go-ahead this year. Our one in Ukraine is 1.36%. So getting grades about 4%, this is an extremely good asset, but this is more of a medium-term asset. We've got to go in there and start drilling. Lastly, on our investment side, again, if you go to page 4, we have 10% interest in a company called Cyclone. Cyclone Metals has a massive 15.3 billion tonne iron ore project in Canada. Only 2 weeks ago, we finalised a deal with Vale. Vale is the Brazilian conglomerate that is the biggest transporter of seaborne iron ore in the world. They control 60% of the world's pellet market, which is basically green steel. The difference between normal steel and green steel is it's a different technique in how it forms the steel. So in the normality, Australia just gets iron ore, ships it to China. They use coal, turn it into steel with coal and to heat it up. With pellets, it's a different technique. They use gas, natural gas. So they produce the pellet, put the pellets into a gas furnace. Because it's a magnetite ore, there's a lot more oxygen in it, and you need a lot less energy. So that's why they call it green steel. Green steel is very, very important. For example, all steel imports into EU have a $60 a tonne carbon tax. This will attract only a $9 a tonne carbon tax, because in Canada, where we are, we're using hydropower to power up our plant. Again, we're using gas, natural gas, to turn the pellets into steel. So in short, we believe we're severely undervalued just on our investment in critical metals, which holds the rare earths deposit in Greenland, and it holds the Wolfsburg asset in Austria. We've got the Ukrainian asset, which we obviously can't work on at the moment. So that's huge upside when the war finishes. And your guess is as good as mine when that happens, but it looks like things are moving quickly. And then you've got the Irish asset, again, 100% owned by European Lithium, which has got one of the highest grades that's been found in Europe on lithium as well. And lastly, it's the 10% interest in Cyclone Metals, which has got the big iron ore deposit in Canada. I'm sorry about it's 4 a.m. here in New York, and my laptop blew up, so I didn't do the slides. So thank you very much over there for helping me with the slide presentation.
Hey, thank you very much for the great presentation, Tony. It's really appreciated. It's, yes, very early in New York, so thank you for still joining in. I think it's a very, very important time right now for European lithium. A lot of developments are going to be coming soon. For everyone that is watching right now, you do have the chance to submit your question in the Q&A box. I will be reading all questions to Tony, so let's start with the first one. Mr. Michael is saying that, can you comment on the transport of the ore to Saudi Arabia that will lead to a higher CO2 footprint on the lithium produced? And maybe go back on explaining again the reason you're going to Saudi Arabia. That might be counterintuitive for Europeans that are right now watching the presentation, but obviously there's a lot to be done with banking, with financing the project, and making sure on long-term energy cost, I guess. So if you can talk a bit about that.
Very, very good questions. I'll touch on the second one first and go on to the transport second. Yeah, we had talks with the Austrian government and the EU. Because the product is coming back into Europe through our offtake agreement with BMW, they saw no problem. The issue that we had is it probably would have taken maybe up to 3 years to get permission to build the hydroxide plant in Europe. So that was one negative. The other, as I mentioned earlier, is the huge savings we're going to make on the energy cost in Saudi, the tax rate in Saudi, and the interest rate in Saudi. So those three alone, we think will increase the NPV of the project by at least $600 or $700 million. So that's only going to help shareholders. But the key for Europe is it's a European supply chain. We're getting the raw ore, we're turning it into a spodumene. So we're already creating wealth in Austria for Europe. And then the product, for example, if we were going to sell that product to China or somewhere else, the European Union and the Austrian government wasn't going to allow us to do it. But because the product is coming back to BMW, they were very, very fine with that. And because of the constraints of our mine, we can't expand. So the maximum we're going to get in hydroxide is about 10,000 tons per annum. That leads into the second question. The first question, sorry, on the transport. So that train line is already built. I think it's opening later this year. It goes the longest tunnel in Europe, 56 kilometers through the Alps. It's 7 kilometers. There's a station near our mine, 7 kilometers away. We'll put it into a container. It's not very big, guys. When you look at it, it's not like a bulk material. We're only going to be producing 65,000 tons per annum. So really, we're only transporting 5,000 or 6,000 tons per month. Right? You put that into perspective, that's only about 2 or 3 containers. The train is going up and down, as we know. So you're not going to increase any footprint. The only footprint that you will increase is a 2-day trip from Saudi when they pick up the ore in their boat from Trieste down through the Suez Canal to Jeddah. So that'd be the only extra increase. But the savings that we're making, the carbon footprint, sorry, that we're making probably our hydroxide will probably produce 300,000 EVs. So the savings on the EVs more than compensates for the extra ship ride between Trieste and Jeddah.
Okay, and one more question. With the agreement with Critical Minerals Corp, when they do raise money, do you have to also raise money? How do you protect your equity position in the other two plays you have or three?
Yeah, that's a very good question. We obviously have the right to participate. Uh, our board, European Lithium board, has 3 members on the critical metals board. So we're very, very aware that we do not want to lose our position of strength at the moment. Over time, though, the US don't really like companies that are controlled by foreign entities, and they see European Lithium as a foreign entity. So we want to get our position down to about 25% over the next 2 or 3 years. And we don't want to do that by dilution. We want to do that by selling blocks of our shares to long-term investors in the US and Europe. So at some point, once we come out of lockup, we will not sell any on the market, so it won't depress the price. So, for example, Critical Metals is on the Russell 2000. We've got BlackRock, Fidelity, Vanguard already on our register. But because we're part of the index, as more volume goes through, they have to buy more shares on market. So we may be able to go to a BlackRock or to a Fidelity and say, look, we've got a block of 2 million shares here. Do you want to take it off market? You're not then driving the share price up and paying a higher price. And we think we'll do that in an orderly fashion over the next 2 or 3 years to get down to about 25%. And that will put a lot of cash, though,
Yeah,
into
that was going to be
EUR
the point.
to
Exactly.
help fund the Ukraine and the Irish assets.
Okay, exactly. So both on the left selling blocks and then financing European lithium. So basically, at the end, Critical Minerals Corp will act like its own entity, and
Yes.
European Lithium will continue existing in the long term.
Yeah. So once we get under about 40%, we will lose a board member and we'll put on another board member. So it'll become more independent. At the moment, there's four. There was say 5 members on the critical members board, which we are 3. So we control it at the moment. But over time, as we reduce our shareholding, and we will do that naturally anyway, because we don't want to do an equity raising anymore in EUR itself. So we won't dilute our shareholders anymore. What we will do is sell our holdings in European Lithium in an orderly fashion. And I've made a commitment to all the other shareholders in Critical that we won't be doing it on market. So we'll do it in block trades.
Well, perfect, Tony. So it comes to an end. So thank you very much for the great presentation. I will
No
close the
problem.
presentation with a personal note. I do live in Vienna, Austria. I went to see your project 2 times in Wolfsburg. I think it's great that you guys were able to fast track. You're gonna surely be one of the project that all eyes are gonna be on to restart mining in Europe. So we
Yeah,
all wish you the best of luck. Hope you're gonna succeed, and we'll be there to follow your story. And I hope that attendees will go have a look and see the opportunities that lies in European lithium and critical minerals.
fantastic. Just one little thing, that little white dot in the background, that's our mine site in Greenland. So that's a shot from the side of the mountain, but that little white dot is our light for our drill rig. So it's a fantastic area in Greenland, and you can see the beauty.
Perfect. Thank you very
All
much,
right.
Tony.
Thank you.
Next time.
Bye.
Bye-bye.